Cool. All right. Yeah. So every day I'll move it. So, I'll update my daily open since I don't have it indicated that does it for me. I do it manually. Um, and then I'll also mark out my previous low every day. So there you go. That was a pre-low, yeah. So that's like kind of the little range it's got right now for the day. So it can go below this, whatever. Um, and then here, I'll just put them. Damn it, you'll see it better here. So there's my weekly ranges, okay? And somewhere is going to be the high. Where are you? There you are. Okay. So that's the range from last week going into the new week. So set up the weekly range every week. Yeah. So I'll do it again in the next 24 hours, depending on what is the low, what is the high for Saturday and Sunday. So that's basically it. So that's from 2 weeks ago. So that was the high. That's the low. That's the range from last week. So you got a big range. Then we got the one from 3 weeks ago, somewhere in here. Might be even higher, the 3 week one. Or I might have deleted the low for the high for the week 3, so I'll have to fix that up. Probably did that by accident. It's somewhere in there. No, I deleted it. Anyway, it doesn't matter. So there'll be a 3 week range in here. So a range from 3 weeks ago, okay? And then you got the one from 4 weeks ago. So this kind of gives me an idea like how they like to shift out of the zones, yeah? Where could they potentially come back up to? So if they can basically it tells me they can come all the way back up to here, yeah? Which kind of lines up with some of the liquidity at, yeah, 28.2. There we go. Boom. All right. So that's a possibility. Now, just going off these EMAs, because I use Jordan's EMAs mixed with my EMAs. But this one here was key. All right. Damn it. Where are you? Give me that. That one. So that's the 800. So that's the line in the sand on the daily for me. So until price action gets above that closing daily candle, so daily body candle closes above this 800, then I have no reason to go long in the longer term. Yeah. But the problem is waiting for that is you're going to miss, all this move here. Yeah. That's the thing. But this is just a sign of weakness anyway, because you've got the cloud right there. Boom. 50's in here somewhere. There it is. That's the 50 right there. Zoom this in. There we go. Get rid of this crap. Boom. So you can see here rejection, rejection, rejection. There's a 21 EMA. So it's weak, rejection, rejection, rejection. The EMA's flip bearish. It's struggling to get above the 13. That's the 13 there. And you see it's just right there close to this cloud, the bottom of the cloud. So once it starts closing here, then it's just short. It's nowhere. But at the moment, it's still short anyway. Yeah. Does it make sense? Cool. All right. For what? We're talking about liquidity? I'll get to that. Oh, no, that's my range there. So this is it. This is the range, this little spot here for the day. Previous low, daily open, because it's going to want to come back. It's going to go down. It's going to set a low, which it's done here, and it's come back up, and then it comes back to the daily open. So you know how it is. So if we zoom in, it's going to be dancing around here somewhere at the moment. Yeah. And I don't like it dancing around there because obviously my position's somewhere here. I don't want to get stopped out because I'm in a good position. It'd be annoying. All right. So that's it. So my top-down analysis. So I go from there daily. Yeah, cool. All right. We're everything's like flip bearish. Everything's pointing down. Boom, boom, boom. It's not looking good. This tells me overall macro regarding volatility is flat because this is flat. It's just like that, like straight to 3 o'clock. So there's nothing going on. But the smaller time frames, we can see that there's a downtrend. Yeah, just using EMAs. So we'll go over to 12-hour. Yeah, same thing here. So well below the 21, well below the cloud. Here you got some, your basically indicator regarding any support. Yeah, this is where it likely will come down to. Boom, bounce off. So that's your that's my 200, that's my 800, and that's my 233. Which basically this is bullish overall, but it's going to take so much time. Like, you know, how you say, you know, like this time frame can take like a year before it plays out, that kind of thing. So this is the same thing here. So I'm going to show you something. So this cross, going back to this cross, the 200 over the 233, which I found pretty cool when I back tested it. It's just only crossed once, and that was during the bull run, before the bull run started, which is right there. There you go. So this indicates to me that this is kind of where it's at. If it's going to come down, it's going to hit this, yeah? So what do we got here? Like 25.2, which is good because that's like kind of around where the weekly bullish order block is, where it bounces from. And it's done that. It bounced here somewhere. But it still can come down all the way to somewhere here. That would cover some liquidity that I can show you later. I'm going to start marking out all the PVA candles, which I won't do yet. I'm just going to go over all the trend lines, all right? Sorry, trend lines, the bloody EMAs. So here it's crossed, so that's cool. So that's confirming that there's an uptrend coming in. And then we're getting an expansion slowly. So when this expands away from each other, that means that we have volume coming in high, and it's now in the macro. So this will basically initiate a move, boom, like right up like that. So I'll show you what I mean. Where's that 22 hour? Well, so the last time across, right there. See that? So across, boom, back test, and then it just exploded. And then you have all this expansion like that. So on this time frame, it's already happened. You had this massive move because of it. So the same thing will happen when you see this expand here, but on the daily, yeah, like that. So what I'm looking for is this, and this will indicate to me that we're now going into a bull run. Damn, I hate when it does that. Yeah, that's what I want to see. Yeah, and then and when that happens, that means this will do that, and then we'll just go boom like that. You know, like that. Yeah, and up here somewhere is where the imbalance is, the big one. So that's what it'll create. It'll create another leg up when this actually expands. That's the only time. Yeah. So there's still something happening. You know, you got a imbalance right there, of course. So now going into what's happening at the moment. So I'll go through all these crosses that I use. So every single time frame is now bearish, yeah. So flip over to my short-term indicators. There we go. You can see I don't use that many indicators. I only got two, apart from, of course, the RSI and the Stoch that I'm using. So here you can see, look, it's just hit, what, 100 already, and it's kind of already topping out. So it's getting ready to pull back over. Yeah. This has come right up. So it's come back to the 200, which is normal. This is mean reversion. So it's come back into the means. So we've had a shakeout, boom, up to the 200. So what you'd expect here is to build a bit of strength. If there's volume coming in, then it's going to come to here, to the 800, yeah? And then it'll start to kind of make its way back up. But if it gasses out here, like you saw with the Stoch, that means it's going to come a little bit more back down. But I'm waiting for this 50 to come back over the 200. See, it's already starting to come back a little. But yeah, 800 is above the 200, so it crossed bearish, and that happened sometime this morning for me. Yeah, so that happened, what, 6 hours ago, yeah, about there. So that's when it went bearish. But the early indication for me of it actually dropping was around here. When it happens here, when the 50 comes below the 200 is your first sign of this massive move coming. Yeah, because you'll get your contraction, expansion, boom, and then you get this thing here, which is kind of, yeah, looks like a W, yeah? Pretty ugly W. Anyway, so bearish, 3-minute, same thing, crossed over, bearish. We've got a pretty cool pattern. 5-minute, same thing again, boom, bearish, confirmed again. This is just everything's just now down, but it's telling me at the moment here that there's fuck all volume coming through, so there's low volatility. So this is going to lag. Just yeah. So these 15-minute all the way to the 1 hour are all bearish. They're still there. See, this is kind of, you can see the fake out here. It's done this. So I was expecting this to go boom cross. When that crosses, then you got confirmed upside. Then everything will start to flip over up to the 1 hour. And then once the 1 hour does the same, where the 200 goes over the 800, then I flip over to the 2 hour and I start going to the macro. So right now, I have no reason to look at the macro at all. I don't care about the macro anymore until these all flip up to the 1 hour. Yeah. So you can see here, it's just like, meh, there you go. So it's nowhere. But also, this is the most important bit here for me, is on the 1 hour with the cloud, the 50 is pointing down, 200 and that are slightly coming down. So we're in a very slow downtrend, like very slow. And you can see here, it's just closing below this cloud. It's rejection, 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 rejection. So it's like no need to go long. There's like no reason to go long here. That's what it's telling me. Until it gets and closes above here. It needs to close above here, and it'll probably get stuck in there. Basically what it's telling me. And the same thing here, if I go to the 15-minute, yeah, it's going to come back up here and it's going to test around here, which is, damn it, close to my take profit, which I don't want. Anyway, you see what I mean? You got that? Can you hear me? All right, cool. Everyone's so silent. So if you got yeah, I got you. So that's really quickly how I do it. Yeah. And then if I'm looking at like divergences, like I can do it off very small time frames to actually really understand the divergence a lot quicker. But typically I won't map out divergences or anything less than an hour, because you know how it is. This thing changes its underwear like we do every day very quickly. It just, yeah, there's no point just marking this out in the 15-minute or whatever for divergences, because it can just flip very quick. So, you want your 1 hour plus kind of divergences. So we got a stop hunt right there. Yeah. Where's my little zoom? Zoom. Where's the zoom? So I hardly ever use these kind of things. There we go. And there it is. So we have a stop hunt here from the algorithm, being that's a bright green candle. So that's the algo right there. So we got going up, and they're going to bring it up here somewhere. So I might want to change my actual stop loss just in case, because it's going to come here and it's going to fail there and it's going to come back down. So it will send me an alert, unless it just keeps failing here on these smaller EMAs. So with these smaller ones, this is my 5 and 13. So the 13 EMA across the board to the higher time frames, and the 5, which doesn't obviously work on the higher time frames. But I can, I guess, but I don't use it. But this is like kind of where I do my, you can use it for like scalps. So if I go to the 1 minute back, let's do that. Let's do that. Better. Excellent. Okay. So this is where I can see the moves happening a lot faster, and I can actually scalp a lot quicker. So what I'm initially looking for is, obviously price is always going to be going around this 50. As you can see, it just goes in and out of it, in and out of it. It's up above it again. And what I'm looking for is the crosses of the 13 and the 5. So where you can kind of quickly understand when to go short, which will be across right there. So right there, you would have gone short, yeah? And you would have seen it and would have rejected the 50, and that would be confirmed, yeah, just stay short, drop. Yeah, yeah. I want to see the I want to see the 5 cross below the 13. So the 13 is this yellow line, the 5 is the pink. I want to see the pink go below the yellow first. Then I want to see it go below the 50, and it's gone below the 200, which is big too. See, it's going up, damn it. So bear with me one sec. I just want to check my position. No, I'm still good. Yeah. See, it's gonna see how it's testing it. It's just hitting this 200. So it can just roll over here still. But yeah, that would have been my entry for a short right there. Okay. And then same thing applies here. Like you're waiting to see when to go long again on a scalp. So here you go. You know, if you're game, you would have seen it here because if you're playing the divergences on a quicker time on shorter time frames, you would have seen, a stopping volume candle, boom, up, and you see there's a gap here, so there's potential for it to come down and reclaim this, cover this gap. But you're going to see that it's going to try and make its way up to this 800, okay? Because it's going to set the range for the day, which is really annoying because I don't want it to come back into my position and stop me out. So just give me a sec because I want to adjust it. Stop loss. Get rid of that shit. Okay, so there's a lot of times I don't actually even use a stop loss. Just with the method that I use, I don't really need it because I don't want to get stopped out right now. So yeah, so you've seen where I see it quicker, these moves. So if I go out and you go to say like 15-minute, yeah. So there you would, that's so you see where I would have gone short on that scalp right there. But on the bigger time frame, same thing applies there. You would have done it there, yeah. So if I go back, boom. Uh, uh, remember when? Sorry, this one that I just marked. Yep. Yeah, it has. Well, this is just using EMAs without actually switching on the divergences, so without using Stoch and RSI. Because if I had Stoch and RSI running, seen the I would have seen the actual reversal kind of the divergence here somewhere, yeah. So that would have told me that we're getting toppy. There you go. So somewhere around here. So yeah, there from there to there, it's yeah, yeah. So it's pretty flat. This is pretty much a straight line, yeah, there and there. And then this is kind of like that, kind of like that. So there's a divergence, yeah. But if I was just using EMAs without any of those RSIs, that cross right there would have been it for me. And start looking at short, but I would have missed this move here, yeah, this bit, which doesn't matter. And then you can see that this is all bearish anyway because the 800s there, the 200s below, and this is all coming down, yeah. And then I'm going to show you something with this cross here where I would have seen the move a lot quicker on the 1 minute. Okay, so remember when I was saying when the 50 crosses below the 200 is kind of my first warning sign that it's going to come down. All right, so you'll see it now just by doing that cross without even looking at the 1 minute and realizing that that's what it is. So yeah, there, see that 50 below the 200. Yeah, so that's it. That's the first warning sign for me that it's flipping to go bear. Yeah, and the same thing would have been here. All right there. I know that. Sorry, there's apologies. There's the cross. That's the one that's on the 15-minute, not the one previous. There it is. See it? 50 below the 200. Boom. Yeah. Short, 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 short. And then look at that. And then you can see the leg down, leg up, leg down. So there you go. So there you go. First leg down. Dun, dun, dun. There it is. Yep. And then you got second leg down. Done. Damn it. I used the wrong one. Hold on. Here we go. Back. Uh, uh, there you go. Yep. Seen that? second leg down. And then we're going to go here somewhere. There's going to be another one. Like that. Yep. Cool. 3-level drop. That's what it is. All the time. 3 times down, 3 times up. Yeah. Okay, so that's using EMAs, really. So you get that? And then obviously, yeah, cool. We got a W kind of forming here. Yeah, it's done the whole like over the creek kind of thing, rally, blah blah blah. But it's creating that around the 50. But it's still, given that it's the weekend, I'm not really going to put too much weight on this pattern because there's no volume. Because I can tell there's no volume because here this is still pointing down and the 200 is pointing to 3 o'clock. So it's telling me there's no volume. But there is interest here because the 50 is obviously pointing up. So it's just doing that, really. Nothing much, nothing special. It's just holding price. Okay. Yeah. Now I'll show you how I mark these liquid PVA candles out. Okay, what's happening here? So you got 2 here. I'm going to turn all this crap off. Ah, damn it. Boom, there we go. Okay. So just off the 1 hour, you've got them there, yeah? You got one there, and you got one there. Cool. So what's happened so far this morning is you can see here, it's come down and recovered this candle right here. So earlier it did it, at 6 a.m. my time. So 3 hours ago, 3.5 hours ago, it recovered how much of that? Yeah. See how it did that? 50%? Yeah. And then it comes down, and it comes back. Yeah. See? So what it does is this. Go up, boom, it blasted back up, then it came back down, recovered 50% of the orders, traps everybody, makes everybody thinking, yeah, we're going up. You can see here, rejection of the cloud, rejection, nowhere, boom, comes back, recovers 100% of it, or nearly 100% anyway. So it's left a little bit on the table, yeah? So this is just using this time frame. So what I do here is I mark this out. Yeah, cool. Like so. Like that. Get rid of this crap, boom, because this is all I care about. Yeah, yeah. What is this? The 1 hour. So I put 1. I put my 100%, like so. That's it. There we go. So now I know that there's still on this time frame. There's still orders remaining. This is institutional orders here because this is an irregular balance. This is irregular volume. That's what this candle represents. These hollow candles, to me, they represent retail. It's just noise. But of course, like if I go lower time frames, in there's going to be institutional orders that are moving this too with retail. But zoomed out, hollow candles to me represent retail. That's how I view it. That's my mindset. Yeah. So that tells me that here is where it can come back up. All right. On the upside, as long as trend and momentum turn, this is where it's going to go. All right. This is its next target, regardless of anything. This is where I know it's going to go. This is so here, and it could top here, but this is just using the 1 hour because I can do it. Once I start doing the higher time frames and start marking out, then you start to see how I map it all out. But same thing here. I just care about these candles. That's all I care about. I just want to know. So once again, you'll see here, dump, boom, come back, recover. So that's the rally, your little auto rally there, boom, supply test kind of thing, Majig, over the creek, boom. It's creating some kind of W. So obviously, if volume comes in, it's going to come up here, recover this, and then it has the ability to come back and drop once again. Yeah, and trap traders thinking that now we're going long. Okay, because if it starts stalling at the top of this cloud like it has here, dun dun dun, without breaking above it, with a back test off the 50 like you see here, it goes up, then it will go down. And the reason it will go down is because if I go to another time frame, I'm going to show you where the actual real imbalance is now. Is right there. This is the reason. See it? Cool. This candle right there. Yep, they recover these blue candles. Blue candle's the same as a purple candle. They're no different. Yeah, yeah. Look at that. 50%. Yep, that's all I'm doing. So on the 1 hour, you'll see it'll come up. So it will do that, rejection, rejection, and that's once again the 50. There you go. So the 50 on the 22 hour is the 50 is below the cloud here somewhere on the 1 hour. Okay. I think, wait, I got that right? No. Sorry, it's there. So below the cloud on the 1 hour is this. No, hold on. I'm confusing myself now. Yeah, at the top of the cloud. All right, cool. But this is why I went short way in advance, because this is how I do it. This is without even looking at trend, whatever, when you that crap. I just know that this is where the orders are. This is what they want. This is They always recover their candles. They don't care about these candles, these hollow candles. They don't give a shit about that. But within these candles, obviously, like we saw, like on the 1 hour I was showing, that there are orders that they have in there, and they'll recover those orders. But primarily, the bigger the time frame, the greater the conviction in regards to recovering this candle. Hence, it's on the 22 hour. So if this was on a daily, which is pretty close, or if it was on a 2 day, 3 day, then you'll see them just recover the whole thing. Yeah, that's what they're coming for. So like here, blue candle all the way up. Obviously, the EMAs have moved since then. But, mm, all of them, all of them, every single one of them, from from the 1 minute to the monthly. We can go yearly, but there's nothing on the yearly. Yeah, because if I went to the monthly, you can see the one big pink candle, and you could have gone, you know what, I could have just gone long to 30K. No worries. Set and forget, because you know that they're going to recover it, and then you just forget about all the noise in the background. If I was playing the same, using the same strategy then, say back in January, as I am now, it's just I've advanced a bit more since then. Yeah, because I'm starting to see how they're really recovering these candles. So you can see that. Look, it's just come back all the way right there, and it's just perfectly recovered it. Yeah. So that. Uh-huh. Body, but it left that. So leaving that, it came up, and then it goes, no, I'll take it again. Yeah. And in doing so, it creates another one. Every time they do it, every time they make that move, they create one somewhere. So there'll be one. This will be one too, just on a different time frame. I can show you. So the blue, you can see it appears at the lows. Yeah. So, so below the 50, below the cloud, all the EMAs at the time were all bearish, and here it appeared below the moving averages. Okay. So forget about these ones here. It's here that where it happens. It's always below the cloud, below these kind of moving averages. You'll see this big drive. So that was them enticing the market to go long. Okay, in preparation to completely roll over. Same thing again here. Entice the market, boom, to go long, in preparation to roll back over. Yeah. And then you see that kind of hump play like that down, stepping down. Yeah. And the reason for that, see, so what I do is same thing again, same practice. Boom, there. Let me get rid of this. Like there, like that. There we go. Cool. Mark it out. So no, yeah. So I did it wrong. Sorry, because it's already covered 50. I want to mark the 50 out. I just mark this one right there. So I put like that, like that, like that. 22, 100%. So I know which time frame when I'm moving around the charts. Okay. And obviously, yeah, and obviously where are we? I lock these in, yeah, so I don't move the lines around when I'm charting. Yeah, yeah. It's like I don't use any of this crap, but yeah, it's there's my alerts. Yeah, the PVA Dragon alerts, whatever. I don't do that one. I'll just set an alert and go, yeah, cool, alert done. Sort of wake me up when it hits there, that kind of thing. Yeah. Damn it, go away. Anyway, I still got to get better at this. I got an alert that I don't want. Yes, go away. Cool. So I lock that in. So now I want to know, okay, well, what's next, and why is this so going into the play? First most important thing is we understand that trend and momentum. So momentum and trend is to the downside. Yeah. Um, and then this is not even looking at divergence or anything like that. Then also I need to understand what the narrative is. So most important thing I want to know is yes, thank you. So I use Forex Factory. There's a couple of other websites I use. Okay. So I want to know what's going on in the markets all the time. So what do we got? Calendar. Yep, there we go. So see here. So we got Sunday. So this is that meeting you're talking about. That's just happened. Yeah, which is all day. So you had the announcement. You had the announcement today, which is my Sunday, obviously, which is your Saturday. And then we can see here every single red folder is the important news plays. All the rest is just it's just info coming in. So this is the kind of stuff that will drive the euro dollar, etc. And then you have coming into the US times. So that would be the US 12 a.m. my time, the ISM. So that's a market mover there. These kind of things. So in regards to interest rates there, that's for Australia. Australia once again. Canada, here we go. Unemployment claims. So there's another one that's up and coming. So you can see here this week there's not a lot of news coming. So it's really just the debt ceiling that we had, which is going to be the big mover tomorrow, and then unemployment claims, and then coming into Friday, nothing much again. Yeah. This is when it happens. Yeah. This is where the volatility happens within here. Yeah. So it's good to actually use this and then Google and research what all these meetings mean, what they do for the markets, because what do they do for bonds? What do they do for currencies? Because for any time, any good news, bad news, it drives the DXY, yeah, the basket of currencies. So if that goes not in our favor and it goes to the upside, then obviously Bitcoin's going to crash because we pay in US dollars, regardless. I pay in US dollars in Australia for Bitcoin. All right. So US dollar is king. US dollar goes up, Bitcoin goes down. It's pretty much that simple. Yeah, but it's understanding how these move the market. Where do they move the market? And then you look at other things like at that time you'd be looking at what is gold doing? Because gold is like a safe haven. So if that's starting to really pump, then you get a good idea that traders are getting a bit more scared. They're not getting into risk on assets. They're starting to put their money into somewhere where it's safe for them. And they're also going to do that with the DXY. They're going to start betting on the DXY, on the US dollar going up. And they're going to start be taking profits out of things such as Bitcoin, such as S&P 500 stuff, all that kind of stuff, commodities, equities, that kind of thing. Yeah. So that's one main thing I use for the narratives, apart from whatever news plays I see out there. Anything that comes out crypto news, I don't care about myself. That's just me. I don't care if China's banning crypto or whatever. It's just a stupid play of mine, I reckon. But this is where it's at. This kind of stuff is what moves the market. All this crap, which happens, as you can see, every day. But for this week, we're kind of good. There's not much going on, apart from some European stuff, unless there's some crazy story that comes out. But we know it's the debt ceiling at the moment, and it's not giving me any more. There we go, and it just goes on and on and on. So these are all market movers here. So orange folders, red folders, core price, CPE, price index, that's a market mover there. So you get volatility around this time, but your time 12 hours behind. Same thing here. All this kind of stuff moves the market. FOMC meetings, etc., etc. Yeah. So we'll go back to this crap. Yeah, so that's my Yep. Correct. Yeah. So doing that practice and getting to understand what all those meetings mean is what it tells me is within this chart, where you're seeing these candles is the narrative is the reason is why they're going to come back to these candles and why they set these candles up in the first place in the past for the future. You get what I mean? So it's like you've heard Water say like it's already been priced in the news because it has. They've already prepared for a short. They've already prepared for a long in the longer and shorter terms. Yeah. So well, you're not going to see it here. Hold up. Give me a sec. Let me find the candle. There we go. See this one here? So this is what everyone's kind of banking on happening right there. So you're gonna see out in YouTube, everyone's talking about this happening. Yeah, that. Yeah, this play. Yeah, which is this play that we were talking about the other day when you were live. The bigger W. Yeah, which is probably something like that. That's what I was saying anyway. So what I was saying is for this to actually be confirmed and be real, and it can be real because you can see here they've recovered. They didn't cover 50 up to 50%, but they recovered a bit of it. Yeah. So we have all this. This is where the orders are in a drawdown. That's where institutional orders are on the higher time frame. So if I come back down, just cycle through the frame, see where they are. There we go. They're up there. This is where they went short at 28,000, and they shorted the market all the way down. Here we go. They stopped out. Big stopping volume candle right there in blue. There's your imbalance. This is the reason why we're coming down. So that could, in effect, do that, and that would make absolute sense. Yeah, there you go. You see how they do it? There you go. They come back for the blue, blue, blue. Boom, boom, boom. There you go. There's another one right there. So these are things you've got to be kind of mindful of, where you can get caught out, things like this. But when we're doing this, I've had, you hear people go, well, why hasn't it recovered it now? Why is it recovering this one? It's all about they're going to be moving around this 50 all the time, all right? And then you got to understand what the narrative. So you got to understand what news plays are happening. And then also another big driver is you need to understand when futures expiries are for Bitcoin and Ethereum, because if next week is Bitcoin expiry and futures and also Ethereum, then they're going to be setting up the range to put pressure on the bulls or the bears, depending on what they're trying to achieve. Okay, and then the whole week can just be flat because of it. Yeah, I have it. I had the web page, but I've lost it. But they are out there. I just haven't found a good web page for it yet. Without one I don't have to pay for. We so when the news comes out, and it comes out late for us, if you don't know how to find it, if it says like that, say the max pain is let's say the max pain is 25K, right? So it's gonna be in everyone's favor as a bull to sorry, as a bear to push it all the way down to max pain at 25K if the bulls are trying to achieve 28K to get paid whatever X amount of money on their futures, yeah? That they said that they bet on that the future price of Bitcoin on say June 20 is going to be 28K. But the bears are like, no, we bet it's going to be 25K. So they're going to fight between those that sort of level, the $3,000. So that's what will happen, regardless of everything else. But then also you have the narratives that happen that also are driving the market. Because if something really bad comes out, and this is what's really changed since going into this year, is news plays are now the biggest driver of the market, not what it was like during the bull run where you just place a bet and just go long. It's not like that anymore. Yeah. Every news play moves the market. It could be just like a shitty interview where someone is hawkish, or like they're talking about how inflation's sticky, just crap like that, and it just kind of, yeah, that kind of shit moves the market. Yeah, before, where it didn't, where it wasn't really what it was all about, say a year or two ago. It's the game has changed. Yeah. So that's why I don't. Yeah, exactly. That's why I don't sit there and scratch my head anymore and go, well, why is it moving? Why is it doing that? It's because this is why. It's that simple. It's not because the moon changed and the tides went up. It's nothing to do with that. That's how I see it. You know what I mean? I mean, moon cycles, obviously, yeah, they work. But I don't care about that. I just care about what's happening in the world. You know, is there a shortage in grain? Is there water supplies down? Or are they dropping bombs now in Ukraine? That kind of thing. Because if you traded the Russian war thing that happened, it created a big W in the chart at the time. Like, it was a big leg down when Russia first invaded, and then the Ukraine started fighting back, and it all became cool, like they were winning, and then you got a big leg up in the market when they started supporting them, giving them money, all that kind of stuff. And then you had the turn of the tides, and then we got another leg down. So you see how the market is affected just by that kind of news play. And it created the shape, the pattern that we all watch. We look for the M's and the W's, you know. But like here, you got another thing here is you got cycles, yeah. So just using this, you got, there we go, W, boom, 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 markup phase, distributional top, M, markdown phase. What do we got here? We could have a potential markup phase, yeah. So this long, whatever that's going to happen, it could still happen. It's just got to get above the 50. It's got to show strength, because everything for me, like itself, is the 4 hour. Let me just go with the 3 hour. I don't even know why I have the 3 hour. Should delete that one. But here you go. Here's the reasons for it. So back to PVA candles. So I would mark that one out. Right now. So you see, everything happens from the 1 minute all the way up. That's how it works for me. That's my method. So the difference between, say, Tino and myself, we both use the same thing. He'll go on about the red candles, green candles, of course, because you can see here, green candle, green candle, green candle, come back, red candle, and obviously there'll be potentially another candle coming down here to recover the remainder here. But I know here that that's a PVA candle on a different time frame, just like it is here, because I'm just zooming in and out to see where the orders are. Because if you can visualize this like Bookmap, I'm zooming in and out to see where the red lines are. So red line, yellow, red line, yeah. That's where the big boy and girl orders are. Forget about all this crap. Don't worry about that. Yeah. So what it is I know where they want to go, as long as momentum and trend are showing me that way, and then it's just about time. That's all it is. And that's how I do it. So that there tells me that this is potential to come back up here. Yeah. Within the shorter time frame. They have a reason to come back down here. Yeah. So at the moment, there's, using the EMAs in the cloud, there's no reason to go long, because rejection, boom, below the 50, rejection. Coming to the cloud now. This is going to be the next most important thing in, say, 2 hours or the next 6 hours. Is what is it going to do? Is it going to start closing below this cloud here, or is it going to start moving back up to the 50 but still closing below the 50? You know what I mean? Until it closes above that 50, candle body closes, it's still nowhere. Yeah, it's still creating the pattern. So this can come down and dip again, and that would create the W, yeah, on here. And then I'd be looking at this bigger pattern starting to play out again. So I wouldn't be looking for longs yet. That's me anyway, because this needs to happen. It needs to do that, needs to do that, needs to do that. Cool, we got that. what this needed to do, which it didn't do, this is where the fake out was, is like we were talking the other day, it needed to come up like this, boom, whatever it was. I said 27.9, something like that, just be conservative. There's your W, but it's not a W yet because this can be a swing pattern failure. You want to see it come down to here, to that cloud, boom, retest, up. There you go. That's your W breakout. That's what you want to see because it can do the opposite right now. Yeah, it can do this. You can do that, boom, test, drop. Yeah, and there's your M. Get it? Yeah, cool. So that's it. So like, all right, I'll show you how to mark out a candle in the future because I know, and I'll use a different chart because I've got so many Bitcoin charts. So I use Bybit, Bitstamp from my TA because it seems to have the most volume. So I can get a better gauge on the actual candles, where they are, and that they're more impactful throughout all the other exchanges. But if I go, say, like I trade Bitstamp, see that? It's the same thing, pink candle straight away on that time frame. Yep. So that's conviction that across the board on all exchanges, that's where the orders are that they're going to come back to. Same thing here. I go like that. On Bitstamp, let's see if it's on the 22. Yeah, boom, blue candle. There you go. That's what they're going to come back for. Oh, there we go. They left some there. That's what they're going to come back for. Yeah, starting to see it. And then you go here. Yeah, so you go here, look at that. We haven't forgotten about this one yet. Right there. Blue candles, all waiting to be recovered. Now, if I was doing ICT stuff without even using these candles, because this is how they like to do it, right there. So wick to wick, boom. There's the imbalance. All right. From where it wicked up high here, this previous candle, this big candle going up, this is where they drove price up. There you go. That candle stopped there. That wick there, wick to wick. There's your imbalance. Within there, you have your order blocks. All right. Same thing here. All right. There. Go. Yeah. No, because I can zoom in and I can show you pink candles in there too. Yeah. I'm just showing you an ICT thing. That's all. Another way. Yeah. Without you, this is if I didn't have the candles on. All right. Hold on. What am I doing? There you go. Let's turn them off. Let's just go stupid green and reds. Let's go old school. All right. There you go. Where's my balance? There's my imbalance. What did I do? See that? Came down. How much? There we go. Let me measure that one. Wick to wick, because that's all I care about. There you go. Come down. It's collected majority of it there, yeah? But it's left some on the table. Hence why we keep saying, oh, it could come back to 25, yeah? So let me see it on the daily. There we go. That's a bit better. Yeah. So this is where it could really come to, this bit here. Yeah? Somewhere around there. Inside here. There. So that's what it could do. Like so. So whatever this is. Yeah. Right there. Boom. Bounce. Like that. Yep. Yeah. So I'll do it again. Yeah. So let me do it on a really big candle. So the weekly imbalance. I'll go to the weekly ones, right? And then you get to see why and what is happening. Why is it going up? Why is it going down a little? So obviously, yeah, big W. confirmation of W breakout, first leg up, boom. Yeah, okay. We got a leg up. This is not the second leg, this is the first leg because we have the W, come back, lock the pattern like, remember I was showing you 4 hour, continuation. That's confirmed W breakout. Now it's coming back down again. So the next leg up will be there, boom, again, consolidation, okay? So to measure out these, let's say this is it, all right? Because this is what I'm looking for. If everyone wants to see what the upside is, this is the upside, okay? It's in the charts, it's not a lie, this is it. So it's between here. So this is where the imbalance happened, the irregular volume, right there. That's it, okay? This is the weekly imbalance, right there. There you go. That's ICT, okay? So you can see that it has, this is where they would bring price up to, this level right there. This will be the rejection point there, the 50%. So what do we got? 35.7, yeah? So what you want to see is, if you want to see strength when it comes into these areas, because it's, what I'm going to show you is it's done it here down below, all right? This is why we are where we are. So here is the same thing right there. From there to there is the imbalance going. Okay? There to there is your imbalance. There to there. Ah, damn it. Where'd my box go? There it is. Is your imbalance. Pretty simple. Just wick to wick. Measure it, fib. There you go. I don't even do these things anymore, which is the fib, pull, swing high, swing low. Where is it at? Is it going to the golden pocket or whatever? I don't care about that shit anymore. This is what I care about. This is how I trade with ICT. So, and this is what's happening. You see that come down, recover 50% of the orders, retest, lock in the pattern, boom, pumps. First leg up, same thing, confirmation. Here we go. It's going to confirm and lock in the next bit for the next leg up. That's what's happening right now. Okay. But also, if the narrative plays out and everything goes to shit, this can completely roll over. So that's what can happen too. All right. But it'd create another pattern. It'd create like a bigger pattern, let's say, because you'd see this. It'd be like this. If it rolled over, yeah? It'd be like that. Get it? Yep. Makes sense? Yeah, exactly. Because you see how it's just patterns within patterns. So as we always go on about, there you go. It's right there. It's that, lock in the pattern, leg up. That's confirmation of your W breakout. Once again, it's going to do that. This is what you want it to do is, who cares if it goes down, because you want it to go down and do this like that. And you want to see it bounce, which confirms then next leg up. And then you get your, like you always say, you get your contraction phase, you got your expansion, contraction, expansion. And you want it to contract here. You don't want it to hit there and completely reject and completely roll over then, because it's going to come to here. There's a bearish order block here, just like there was a bullish order block here. Hence why we're bouncing around here and off that. But it can still come down, because if it comes down, breaks it, tests it, then you're going to have continuation to here. And it's going to come for this bit right here. Yeah. That's the game. So, and that's how I play it. But this is the move. This is a real move. This is it. This is very, very extreme. This is possible. The high probabilities of that happening, as long as the narrative doesn't come out really bad and the market complete rolls over. So that, like I said, if that S&P, like it's recovered its final gap, which I'm watching, obviously it's not doing anything today. But here, there we go. These are all the gaps now to the downside. It's recovered its final gap, which took all this time from October 2022 to come back up and recover the final gap here. Yeah. That's how long it took, 9 months or whatever, 8 months. But in doing that, it created all these imbalances. Yeah. So it's going to come back for that. So here we go, daily gap, 4-hour gap, 22-hour gap. So if I go daily gap, you're going to see it. So this is how I play these charts. All I care about is the gaps. Yeah, see that? Gap. I'm just marking the bottom of it. I should just be marking the body, not the wick, because this is stocks, this is not crypto. Yeah. So this is incorrect. It should be actually there, not the wick. All right. Same thing with RSI in stocks. You don't go off the wicks, you go off the bodies. Okay. Like that. You don't look at the wicks, you look at the bodies. Make sense? See that? There we go. Here it is. There's your imbalance. There's your divergence right there. Boom, boom. So this could start to turn right there. Okay, because you have that to that. You get it? So you got price going up. So price is rising. RSI is not. Yep. Stotch is gassing out. It's at 97. It's going to reverse. Simple as that. It might have this little bit of wiggle room, but that is gassed out. So you can see every time it hits 100, it'll play around, and it has to go back. It has to reset. It has to go back to 0. Every time it goes 100, it has to go back to 0. You know, even if it just goes like you see here, it's going to come back down. That's what it does. It's like a rev gauge. Yep. And then in doing so, you have the reasons here, because it's going to come back. It's going to collect its gaps. It's going to probably collect the gap, come up a little, come down, collect the next gap, you know, that kind of thing, and make its way down. You know, and when the S&P starts to get around these figures, like here, you see that these are all real gaps. This is what it's waiting for. This is like when, you know, day's end comes. You know, Armageddon will be here. Because when the S&P breaks, I think, what is it, 35? I think that's, oh no, sorry, I think it's around this level here when the S&P starts to break, is when the market just goes, oh my God, and then everyone panics. Yeah. And everything just completely rolls over. All this stuff here, all these little coins and that, they're just going to go to like nothing. That's what's going to happen. That's why I don't actually hold any of them anymore. Yeah. Yeah, that's it. There's my doom and gloom. But I'll go back to it. That's all right. I'll go back to this because look, here we go. So those imbalances that we marked out, for some reason, they bloody disappeared. Why don't it do that? It normally doesn't disappear like that. Oh, wait, am I on the right chart? Sorry, wrong chart. There we go. All right, let me get out of this. Okay, so I'm still pretty amateur at moving around in the charts. So if I was doing a YouTube, it'd be like all over the shop. All right, so I'm going to turn my PVAs on. And you're going to see where the imbalances are. There you go. See? So it's just come up to here. Look at that. Perfect. Recovered this candle, the reason why we came up, and then drop. You see it? So let me scan the higher time frames to see if there's any more of them. Oh, boom! What do you know? There we go. See, ICT mixed with market maker method. There you go. So when they're doing what you see here, marking out OBs and whatnots, and they have all these different acronyms they use, I just go, hey guys, look, pink candle, imbalance. That's it. Simple. Yeah. That's why I keep saying I see in color. That's all I care about, these pink candles, blue candles, pink candles. That's where the market went up, obviously, so there's going to be blue candles, pink candles in there because it's a big green candle. And this is where, like, you'd see like Tino come into the chart and go, okay, cool, see that green candle? Yeah, they're coming down to recover that. Just anticipate that they will take that candle. Yeah, they could take the whole thing and then move all the way up. That works. Yeah. But that there is the reason why price is going to go to here. That is not a lie. People banging on about 35, 40K, that's a real thing. That's where they shorted the market, okay? And then I can find them even higher. See, this is where, there you go. See, this is where institutions actually first time got involved in the market, right there at about what, 12,000. It's even lower than that because if I do a deep dive, I bet you I'll find blue candles right here around 3,000. This is where they entice the market to go long. Yeah. Same thing here. This is where they dumped it. This is where retail jumped in and went, happy days, let's do it. Excited, super excited here. Yeah. But this is where they're present in the chart. See, they're coming back. They just come back, collect this stuff. They're coming back, collect this stuff like that. Boom, boom, boom. Yeah. Look at that right there. Look at that. Spot on. See that? So this is what, you know, when I do the equal highs and lows traps for retail. So being that this is a really high time frame, so what do we got here? The low was 17,567. 17.6. Cool. It's not that far off. You see that? It's off by like what, $30 or something on a bi-weekly chart. That's huge. So if I was doing this, if I knew about this back then I would have been already marking these kind of things off here and knowing where it's going to short. See that there, right there, from this candle. What are we? 39,655. What's that one? 39,520. It's just high time frame. But what I mean, if I zoomed in, there would have been candles that line up to these two. So here was the trap for all this to happen. That was your go short, initial like short. That would have told you that they're coming back for this, all of this, that it's not going to the moon, even though it went up to here. That would have told me at that time, if I knew this, to short the market, because they set up a trap for retail right there. Ever since, whatever it was, what it would take them to do that. Since September to November, they set a trap up. You see it now? Yeah, and the same thing goes the opposite direction. So look again to the upside. Where we got it? Where do we got it? We got anything that's sticking out? You know, somewhere around here, somewhere around there, and there is the same thing. You got equal highs somewhere around here on lower time frames. You know, here, right there, that's perfect. See that 40, whatever that is, 48,280. There we go. Look at that. That's nearly spot on. 48,185. It's just off. So I would mark that off like so. This is how I do it. There is no indicator for this. All right. For all the people that use indicators, this is manual labor. All right. This is how this shit happens. And then I'll just put equal high, and then I'll set and forget. I'll lock it in, lock that in, so I don't move it around when I'm charting. So that tells me that one day they are going to come to here. You're going to see price here, and it's going to dance around here, and then eventually it's going to go boom. It'll be a quick wick, because this is where they do their liquidity runs. This is what equal highs and lows mean, is when they come to it, you get these wicks, you get these traps, yeah, because they'll wick up. So right now that tells me there is a shit ton of stops, margin, everything here, positions, old school positions are here, okay, in the chart. Same thing here was the case. This is where all the positions were, their positions. Okay, same thing here, positions. It's going to be the same the more I zoom in. Yeah. So that's what I wanted to show you, was just using what ICT do, marking out wick to wick, and then implementing the market maker method, which you can see tells you the exact same thing, because the candle comes up as an imbalance for me. So because you understand, the market making method is derived from ICT and Forex trading. That's all it is. It's nothing separate. We're both doing the same shit. It's just I'm doing it with pretty candles. Yeah. That's it. What else would you like to know? Yes. All right. Cool. All right. So we know that. Okay. So I know that we got an imbalance there. Cool. Imbalance. So imbalance. Sorry, this is pretty light. It's just when I'm on my phone, makes it easier for me to actually navigate. We got a little one there remaining. Cool. And obviously there's going to be, I don't know, something down the bottom here. You know, there we go. There's a blue one. Cool. Can't forget this one. That's a biggie. What's that at? Oh, it's back at 25.8. They haven't recovered all of it yet. There you go. There's a reason why. And this is also an imbalance on a lower time frame or a higher time frame. But you can see there's something there left. Yeah. Okay, so if I do equal highs and lows just off the 4-hour, same thing. I'm looking for where the candles line up to the dollar. If it's spot on to the dollar, then it's a definite trap. So what I want to see is, and I'll incorporate these candles from the past. It could be from weeks ago too. Doesn't matter, because they're obviously wicking up somewhere for a reason, and it's coming back to damn it. It's going back to, like, people talk about clusters, like clusters of trading. They're coming back into a cluster of trading, which is resistance, because this is where everybody went short and long, that kind of thing. Yeah. So up here is where the stops are, where people are going to add to their margin if they haven't paid themselves, etc., where they're going to take profit, etc., etc. So it's always going to be the last candles, the highest candle, yeah, is what I'm looking at. I don't care about this candle because it's lower than this candle or any of these candles. I don't care about them unless I'm looking for something here. But it's really, this is what I'm looking at in this time frame. So somewhere here, there is a candle that corresponds. It could be anywhere. Yeah. We'll mark out equal highs. So if I do, I don't know, let's just do a line like that. No, we'll play with this one too. Like that. Cool. So if there's anything corresponding to it, so there isn't. Okay, there's nothing really within the dollar. Maybe that one then, something like that. So what's that? The high there is 27.315. What's that one? There we go. Perfect. See that? 27.310. There's your trap. Cool. There's your reason to come back up. So that goes back to, then I'll show you in a second. So if I mark that off, that's a perfect one for our EQH. Boom. Cool. Locked in. All right. So I want to know why here. Why is there a trap to the upside here? Why are they going to wick it here? So that play that everyone's waiting for, this W, that's definitely possible now, because we know that there's a trap. There's a reason why they're going to come here. Okay, so I need to find out the reason why now on my end. And there will be a reason in a sec. I'm just going to find it. But even that, I could just mark out the FVG, yeah, the fair value gap, with the box again using ICT method. But I'm going to use the market maker method. And there you go. There's your reason. Like that. There it is. There it is. Like that. How much have they recovered of that? Let's have a look. Boom. They haven't. Cool. Because they haven't recovered 50% yet, I'm going to put 50%. I'm going to put 100%. Because I want to know how high this thing's going to go when it starts to take off, so I know where I need to take profit. You get it now? So you can see my pivot points of where I. Yep. Mm-hmm. Yeah. I don't know. That's just ICT. That's ICT. That's all it is. So I'm just using two different methods, yeah? Yeah. But look, check this out. Yeah, check this out. I'll show you. I'll show you how the confluence. See that? So whatever it is, I marked out 50% there. Boom. All right, let's do it. Let's do it the other way. Look at that. See? Pretty cool, eh? Pretty cool. Gives me greater confluence. That price is gonna do this. As long as the narrative is right, as long as momentum and trend are pointing up, okay? And we get volume. Without volume, it's not gonna happen in the right direction. So we're talking this, we're talking that. See that? Yeah, cool. So we have potential to come here, 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 because I haven't marked out the lower ones, yeah? But I've marked out this one. So let's just say it goes to here, which it kind of was. But we know when I went to the 22 hour that this here is a blue candle all the way down. So let's say it does that. Comes to here. You don't want to see it do that. So you want to see it do this. Yeah, that, and then take that. You get it? There's my pivots. Yep. So what it tells me is they haven't recovered all their orders. So if I go bookmap, you just got to visualize this as bookmap right now. There's a big red bar in bookmap at these levels where they want to take, where they want their money. So let's hold on. Let's go YouTube. YouTube. Hopefully they've updated bookmap. I do have bookmap. It's just I don't run it because it's just shit. You're going to pay for the full version. And the free version I had actually did allow me to set it up correctly, but now it doesn't. Bloody changed. So now I have to pay for it. And I don't want it because I don't need it. All right, so let's have a look. Let's have a look. Bookmap. Ah, there you are. Cool. All right. Maybe this one's running 2 weeks ago. Yeah, it might still be valid. No, look, this is not valid. Yeah, they don't have one. Not at the moment. There's not one loaded, so there'll probably one will load tomorrow. But this is a good example anyway. Yeah. Yeah. See that? There? That there, and there from 2 weeks ago is this. You get it? That's what I see. I see that, looking at that candle. So looking at that candle again up here, they have orders there again too. So if I do the same thing right there, boom, 50%, mark it out, boom, mark it out, just like you do with your lines, yeah? These are my lines. There we go. Mark it out. This tells me this is, what am I doing, Don? Jeez. This is where it tells me it's going to go. So I know where it's going to go. This is what I'm saying. I just need time. That's all. The time's right, and I know where to take profit, where they're going. This is why I'll post on a lot of posts when it hits. So it's like kind of the crystal. It's like crystal ball. This is bookmap. Okay. So 6 hours. So I know it's on this time frame. 100% hasn't been recovered yet. So I mark it down, lock it in, and I delete these as they get hit. Yeah. I get rid of them. So 50%. Cool. Lock it in. Sweet. There we go. These are big time frames. So these are big confluences, just like you saw in the bookmap. This is where they're going to want to come to. Yeah, this is where I'll take profit. This is the hard part though, is do I take profit here? You know, do I pay myself here or do I pay myself here? Are they going to go here? You know what I mean? Is there enough volume coming in for them to make a move and go all the way up? So, but you'll know when it starts to happen because you'll, like myself, I'll be looking at the cloud. What's the cloud doing? Because if it starts to get above the cloud, boom, crosses the cloud. This is the 6 hour. Then we have strength. So by the time it's crossed this cloud up to the top, it's already starting to recover up here somewhere. All this, yeah. And then I want to see it go down. Either bounce from here or bounce from there. If it does that, I know it's coming here. And this is where I go, yep, sweet. I get to pay myself at 28.4 now instead of paying myself at 27.8. Yeah. You get it? And it's just, yeah. So 1 minute. 1 minute. Okay. So I need to show you this. So you know how we have these massive moves, yeah? So this is how I play. They do this all the time. This is such a repetitive thing they do. I try to point out. So I don't panic. So okay, so we had this massive move down this short here, yeah? Just boom, like that. Short, 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 and it hit here somewhere. 26, what is it there? So if I go to the 1 minute, so if after it's done a dump like this, say it's dumped, we're now here, there, now there. We're waiting for all the EMAs to catch up. We're waiting for the 50 to catch up to price, all that kind of stuff. So this happens the opposite direction on break. This is what I call breakouts and breakdown trades. Okay, so when it dumps completely or pumps completely, I don't care about any high time frames anymore. I don't care about anything but the 1 minute up to the 15 minute up to the hour. That's all I care about, because that's where the action is now. It's not in the 4 hour. It's not in the daily chart. It's not in the monthly, any of that crap. Okay, it's here. Hold on, let me. Gosh, where did it go? Is that it? No. Where are you? There you are. That's where it is. So if you can imagine, it would have dumped all the way down. It would have done a little automatic rally kind of thing. Yeah. V-shaped recovery. Cool. But what I'm looking for when this happens is, obviously it's done a V-shaped recovery, so it didn't actually have the 50 come all the way back down in price. So it didn't start to consolidate at the lows, yeah? Where it normally does somewhere. You'll see it better here on a higher time frame. There we go. This is cool. This is what I wait for. So the minutes dumped, okay. EMAs need to catch up, so we have a big washout. So what's happening here is you're waiting for that 50 to come down. 50 is coming down. So when it comes down, you see here it does this little auto rally. So what's happening here is it comes to the 50, and that's what you wait for until the next move. You get confirmation if it's going up higher, if it's going low. Yeah. It's going to wait till then. It's not going to do anything. It's just going to do this kind of crap until these EMAs all catch up to price. Yeah. Same thing happens on the upside. See, they'll catch up, they'll start to dance around, and then you get confirmation of upside. But then, boom, of course, it's going to come back down because it's going to be coming here to grab the liquidity. Look at that. See that blue candle there? That's a candle that hasn't been recovered. Right there. That's why I was always anticipating for them to come back. See, they covered 50%. And this is where I think Tractor Trader, Tractor Man, anyway, his indicator told him that was a double bottom, go long. Yeah. But they set it up to come back down. That's what they've done. So hence why we've got this green box here. So there's liquidity there. We've got a blue candle there that hasn't been recovered. So this is a potential place that this can now come back to right now if it wants to. Come back on Monday, create the pattern, and then shift up, like as you saw I was doing before on the 4 hour or the daily or whatever. You go. So that's what happens. 50 comes down, means that volume is starting to tip off, dropping off. It gives them the ability then to come back up and start making their moves. They won't make moves until volume starts to come down. Same thing on the breakout, like so. They do it all the time, like this here. This thing here is the same thing all the time. Breaks out like this, boom, stop hunt, bang. They start to bring it down, and they'll dance around, and they'll wait because they're waiting for the 50 to come up. So when the 50 comes to price like that, it's telling you that volume is nowhere. Volume is dropping off. And when that happens, it then gives them the ability to dump it. That's what's happening because they're going to do it. And they're going to come down to the 200, and then you see it come down 200, dance around, bang, all the way down to the 800. Yeah. Same thing again, dance around. That's all they're doing. And now everything's coming together again. See that? It's all lining up again for the next move. So it's coming up for the next move to either dump it or break through it. That's it. Yeah. And right now, it tells me, because they're straight like this, that there's no volume. But on the lower time frames, it tells me that we're in a downtrend because that 50 is pointing down. Yeah. So I have no reason to go long anymore at the moment. Yeah. There you go. And then there you go. That's where they're controlling the levels. Stop hunt right there. There'll be a stop hunt somewhere up here somewhere. Where are you? Be a little bit higher. Yeah. Okay. There we go. Sorry. So there's your stop hunts right there. Yep, that one. Cool. That one. There you go. There's your range right there. Oh, sorry. Jesus, Don. There you go. That's it. Goes back to that candle, yeah? On the 6 hour. Dun-dun-dun. Right there. There you go. See that? Pretty cool, eh? Yeah. So from the low time frames to the high time frames and how it all kind of lines up. That's the play. So this is the play I'll be looking for. Here's once again that that you can do it there, or you can do it there. Oh, damn it. You get the picture. You get the gist of things. Yeah, 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 like that. But if it does that and it goes here, then it's all going to come down to then flipping over to seeing what's happening here and what's happening here then. Yeah, because yeah, this has got room to move back up. All right, because here we're gassing out right there. Yeah, always at the 100. Ah, crap. So it can do that. It will do that. Boom. There we go. Damn it. Like that. Yeah. This one's telling me at the moment there's no strength. Yeah, because purple is going below the green, as you can see here. So it's low. But it can do that. Come up, boom, like that. All the way up. That'd be cool. That would be that right there. That move. And when you get to like here, around here on this RSI, I mean, this would already be at 100 before even getting to any of these levels here, because it would be resetting on the lower time frames just to creep up all the time. That would be where you'd short right there. So the short will be somewhere in here. Yeah, back to the downside. I wouldn't be going to the moon around here. And a lot of people will be getting excited because they'll be going, oh, it's going to 28. Now, if it closes dailies above the 28, it starts to consolidate on the daily time frame, which is going back to what I was showing. I'll just get to the other charts easier. Going back to the daily. Cool. Goes back to this line again in the sand. Yeah, that one there. So that says to me, every time it gets above the 800 on the daily, candle body closes all the way up, is where there's potential for it to go higher. Only then I should be considering longs for the longer term. Wrong EMAs, of course. Yeah, there we go. So getting above the 20, the 21, and then these all have to flip, obviously. If they don't flip and start pointing up, then there's no reason to continue thinking that it's going to go higher, because that's not what trend's telling us, yeah? So that's what I want to see. I want to see this kind of crap happening. Once again, that, whatever it is there, like that, like that, like that, like that. And then obviously it's going to do that, and that again. Once again, boom, boom, boom. Yeah, there we go. Or it can just obviously go a lot lower. So it can do the actual complete opposite. Yeah, so that, boom, that, then W come out. There, like that. Yep. That could be another one, because what can happen here is, like, if there's not enough interest here, like if no one's buying, then and they're going to dump it. They have to dump it because they want to get everyone excited. So if they are going to dump it, they're going to dump it to this point here, because this is EMAs tell me this is where retail get emotional. This is where they're going to start to get excited and do something. Yeah. Yeah. So like it did here, everybody got super excited and just went, yeah, boom. And then see, there you go. That's where they went long. This is where institutions entice the market to go long, right there. It's what is it at? Yeah, around 20K. So in time, they're going to recover this. They'll recover that absolutely. If I scan the time frames again, see if it comes up. Probably went on the weeklies. Nope, nothing there. Give my 22. Get rid of that. Get rid of all this noise. Yeah, there you go. There's your big imbalances. See that? Right there. So like I was marking out those boxes, but now just using the candles. There you go. Right there and right there. That's it. And then you have that there where they went long. That's it. Yeah. And then you have in the shorter term, right there. There's the candle. So we have 3 points in the chart where price can go. So as long as that happens, then we're cool. It's coming for here, yeah? But if the reverse happens, and the reverse can happen, because it can play this out tomorrow or during the week, and then start doing this, come down and recover all of this because it's already covered some of it, but not all of it. So it can come down, recover that, check it out. No, we're not good anymore. Let's go down. Boom. Let's recover that, come down, drop, dance around here, consolidate, boom, shift out, like that. Get it? Yeah. And that's the reasons why they come there. And then all it takes is a story, the right story. Yeah. Is there anything else you'd like me to cover? Start all over. Well, yeah, yeah. Okay. Okay. I'll show you what I did yesterday. So I got in at what? 27,122, yeah? Yesterday. Even though it went up to 27.3, I went in at, so I didn't wait, yeah? And the reason I didn't wait and I didn't care if it went up was because I saw that. I saw this candle, yeah? So so this is Saturday. So there we go. So around this time here, I saw this candle. So if I zoom in and zoom in, see, and yeah, there's another one. So where we're going? Where we're going? Saturday. When did I? No, sorry. Yeah. So I jumped in. Yeah. So yesterday I jumped in. So see here, it went up to. There you go. So it went up to 27,328. I should have waited and jumped in there, but I didn't. I jumped in around here. Yeah. So around this 50 is where I jumped in, and it's already come back down anyway. And the only reason was because around at the time here, so obviously I placed the trade around this time. So 4 a.m. Saturday. Oh, I mean, it was earlier than that, but it was in this candle here. I placed the trade. Okay. Remember that time we were talking yesterday while I was working? You're doing your live? Yeah. So I placed my trade after that because when I saw that, I was like, yeah, when I see something like this, I'm like, why am I going to go long? That automatically tells me why am I going to go long? If like here, yeah, imagine here, like if I was here at the time, I shorted this 28 for because I mean I had it though it had like a massive divergence to that I posted on the 4 hour that it was going to drop anyway. Because you know me, I would do this. Yeah, get rid of the candles. Get rid of the candles. I don't care about the candles. Sorry, the wicks. Don't give a shit about the wicks. There. because this is how you do it. This is how you mark out your divergences, not about the wicks. All right. Anyway, it was there. That was it. Yeah, get out. There, there, there. Look at that. That was a short. That was a short. There it was, right there, right there. Boom, like that. I could have even gone from back here. All right, go back from back here. Like even that. There you go. See that? See, it hit 100. Why am I gonna go long? That told me straight away, get the hell out, just short the shit out of it. Obviously, I didn't have the right position in Bitcoin, but I jumped on shitcoin and shorted the shit out of it, and it made me all my money. And then plus some because it went back into my position in Bitcoin.